soon after we quit, we actually kind of pivoted into the Web3 space.
What was it before?
So we quit. And I remember, like, I moved from Colorado to Austin, and then I get to Austin, wake up the next day. So it's been a pretty cool. I mean, you definitely get some bad apples, but
definitely.
For the most part.
So, question for like the audience too, like
actually showing that you understand aside from just a few bullets.
There's a lot of psychology to it too. That because I remember this one. You guys asked me like,
there's been kind of advice pieces in this space where if you're, especially early in your career, go to work at a startup, you're not going to go to like an Amazon or a Facebook and be like an entry level or like one above that. Like you'll shoot straight to like middle or top just because. Yeah, all right. Well, welcome to
episode 27
of New Money Talks.
There we go. First take. The 4 people one's always a difficult one. That mic might not work, but it is what it is.
We'll see how this goes.
I'm doing the introduction today. Kyle gave me the job because these are my buddies.
Yeah.
We have Arman and Parker.
Not to be mistaken with the D2C
not
card.
D2C company, Parker.
Shout out
Arman.
Parker.
These are actually my buddies from college. We lived in the same house for like
a year, 2 years, something like
same
that.
Pledge classes, different pledge classes, all good friends. They started a Web3 payments company 2 years ago.
No, a year ago.
A year ago.
Yeah.
Yeah, a year ago. Damn. Time flies.
Started off different, changed up a little bit, pivoted.
You guys are big Web3 entrepreneurs. They live in Brooklyn, but like also Austin and also other places across the world.
Crash gone on a few couches here and there.
I'm gonna let them introduce themselves. Like, tell me exactly who you guys are, what you guys do. Like, I think it's the first Web3 people that we've had on this, like crypto type of stuff. But like a lot of guys and girls who do watch this, like get it. Like it's e-commerce guys, agency guys, just people like new money people, right? It's like this is obviously part of new money. I don't want to butcher what the hell you guys do. So the founders of Peaze.com now, not I.
Yep.
For you. So like, give your 3 minutes on what the hell Peaze is, who the hell Parker and Arman is, and like talk to the people. Talk to us, but like talk to the people.
Yeah.
Cool. All right. Yeah, we can maybe start with Peaze and then get into our personal backgrounds. So essentially, Peaze makes it really easy for any end user to use what's called a Web3 app. Web3 apps are powered by crypto. They're built on blockchain. And as a result, as an end user of these crypto apps, of Web3 apps, you have to have a wallet. You have to have crypto. You have to manage your gas. You have to do all these things. It's really complicated. And up until now, a lot of the tech savvy people that have used these apps have been kind of the entire market of these Web3 apps, and it's been fine. But a lot of the customers that we work with are wanting to obviously expand into the rest of the internet. The internet has 5 billion monthly active users, whereas Web3 has sub 100,000 monthly active users. So bridging that gap requires making the user experience the same as it was in the previous internet. And so what we enable is users to sign in with Google, Facebook, Apple, put down their credit card and use these apps like they would any other app. They would have no idea that kind of all the stuff that we automate is going on under the hood.
So for normal people, what the fuck does that mean? What does that mean for normal people? It's like PayPal, Stripe for...
Yeah. So we've built essentially a Stripe for Web3 or the new internet.
Yeah, but in the way of like in normal crypto apps, you would need a cryptocurrency to make the payment for, say, like even just like a digital good or physical good. And so say we're on the Ethereum blockchain, you need ETH to make that payment. For most people, being able to going to buy ETH, whether it be from like a Coinbase or you're actually on-ramping through like, there's like an on-ramp providers where you can buy it kind of through them within the wallet. It's pretty difficult. And so what we do is basically just allow for that process to get taken care of under the hood. So they can just use your Chase card and operate in the blockchain in any capacity.
So you're pretty much building like what like PayPal did in like the 2000s, 1989 for like Web3 though. Like you're building that early infrastructure of like payments for like Web3 crypto, Bitcoin, Ethereum world in a sense, right?
I mean, it's like in a way, yes, but there's so much of like in crypto that's already been built out. I mean, there's already subscriptions that are like kind of going down with some pretty cool products. Obviously, the on-ramp going from fiat to crypto is established, and the wallet itself is not a novel idea, but the issue is just all around the user experience that is taking place. It's like it's just too difficult. There's too much of a learning curve for any normal person to do it. So really, we're not really reinventing a wheel here. We're just kind of putting it on a different car.
Interesting.
And,
You're making it more simple for like the average person to get involved with this type of thing, right?
Exactly.
Yeah.
Is it just for making payments or is it also for processing payments?
Yeah, so that's the cool thing about like kind of Web3 is that your wallet or so your account essentially is your hub. Like it is your profile. It's your online account. It's your bank. So you own every interaction that goes through that. So whether it be going to, from, kind of like a Venmo style, approving connections. So whenever you go from one app to another, that same profile is in every ecosystem. So not having, you have like your Amazon account, but then you also have like a Hulu account. Instead, in Web3, you just have your wallet or your account, and it would like live across the ecosystems.
Interesting. I want to hear this story. So like, I know both of you for like, I don't know, 5 years now, probably, right? Tell me the origin of how the hell this whole thing happened. Because pretty much it was like, we were in school, we got out of school, and then it was like Parker and Arman started tech company. I was like, what the hell? When like, to me, it made sense, but it didn't really make sense. I want to hear like, how you guys like came up with this? How you guys like started working together? You guys did raise a whole bunch of money too. You've raised like, how many millions?
2.1.
2.1 million. Like, for all you people out there, like, we'll talk about how the hell they raised the millions. Because like, I think that's very interesting. How do you even do that? But like, tell me the origin story. Like, how'd you guys come up with this? How'd you end up moving to New York to do this and all this type of stuff?
Yeah, so I mean, do you recall kind of in college, I was always building stuff. Parker was always building stuff.
You had a bunch of like apps you were building, stuff like that too.
Yeah.
I remember Parker was tinkering with stuff too, like a whole bunch of like clubs, tech clubs, all this type of stuff.
I mean, that was a very Berkeley thing to do anyway.
Yeah,
like, kind
makes
of
sense.
I wouldn't say everybody was doing it, but it was no surprise.
We
like,
all
being
were.
in that ecosystem.
Yeah,
and you were kind of doing all your e-com stuff, which is now translated into all of this. So it's no surprise that we're here now. But yeah, I think after graduating, Parker and I, well, even before Parker and I was continuing to build stuff. Parker was continuing to build stuff. And one project that I was building, and you'd remember, it was like the credit card optimization app.
I do remember that.
I hated my job after graduation.
Where'd you work?
Months. I was at Cisco.
Cisco, Cisco.
Yeah.
For all you people out there with jobs.
I don't know if they know how to use YouTube.
You were at Lockheed, right?
Yeah, I was at Lockheed.
Fuck Lockheed. No, I'm joking. No, you're good. You're good.
Yeah.
No, but actually, like I remember you guys like finished school. You guys had good freaking jobs, like six figures right out of school. Like it was kind of funny because like I thought I was a stupid one by like not getting a job, and then like you guys were looking at me like, well, he's not getting a job. It's like, and then 6 months later, you're like, yeah, fuck it, I got no job. Like we're going balls deep, and I was like, all right, like I guess this is sick, cool. Like why'd you quit? Like actually, all this shit.
Ultimately, it's like you just wake up and do something that you give no shit about every single day. And sure, it pays well, but like looking back in 10, 20, 30 years, like, is that really what's going to make you happy?
And I remember you called me and you saw the job and you were like, yo, I'm doing this. I was like, dude, don't. I was like, you're making like 6 figs, like cleared. You're like, I'm barely working. I was like, yeah, just keep milking it. Like, keep it. And you're like, nah, bro, we're doing this. I was like, I remember the conversations. I was like, yo, like, sometimes I wish I had a job because like making like 8K a month, 10K a month, just like knowing you're gonna make it feels good. You know what I mean? Like it's stability. And then you were like, nah, like I'm doing this. I was like, you sure? And then you're like, yeah. And I was like, you sure? And I was like, all right, but like keep going because like I remember this like I remember these conversations like yesterday.
Yeah. But I mean, we did do both for a little bit, and really the story was more so even before I had even thought of quitting. Some of the stuff I was working on, I was just asking people. I lived in SF at the time in a house with 8 other guys who all worked in tech.
Andrew Cohen.
Andrew Cohen.
Shout out Andrew Cohen.
Elliot Park. Shout out those guys. Asked all of them like, hey, I'm working on this thing. Like, would you want to help? And they're like, yeah, maybe, whatever, blah, blah, blah. Not really. Asked a bunch of people. Parker, which was, one of the people I asked. We were roommates in college, good friends. You remember, there's a good story that we can tell there with the whole bed. You remember that?
Dude, I took that punch like a champ right there.
You ate it. But
we'll talk about that later.
I mean, I just asked a bunch of people like, hey, look, I'm working on this thing. Would you be down to just work on the side? And Parker was the only person who was like, fuck yeah, let's do it. And so we did it. We were working on whatever. And then 4 or 5 months roll by. Both of us hate our jobs. It's not like it was strenuous work or anything, just super unfulfilling and knowing like, hey, if we can take this thing, blow it up into something bigger, not only will we not regret wasting time in the future, but also like there's always that what if. Like what if I had started that tech company and what if I had become a billionaire when I was 20 something years old, for example. Like that lingering thought would have always killed me and I know it would have killed you. So in February, when we had no traction, nothing really. We were like, hey, let's just go for it.
What year is this?
February 22. So a little bit over a year ago. Was kind of like when I called you.
Yeah, I remember that.
Parker was like, hey, let's do this whole thing. And Parker was like, yeah, fuck it, let's do it. We had been talking about it this whole time.
That was like the Skydeck YC time, all that stuff, right?
Yeah.
So that was even before that.
Well, so YC was like the apps were like a month after that, and then we got interviews in April. So anyway, I mean, stuff moved so fast. But
Y Combinator for people who don't know what that is.
We quit in February and then just went for it, and then soon after we quit, we actually kind of pivoted into the Web3 space.
What was it before?
So we quit. And I remember, like, I moved from Colorado to Austin. And then I get to Austin, wake up the next day, and he gives me a buzz. He goes, I got this idea.
Anxiety attack.
We just quit our jobs. Like, I sold my...
What was the idea before? Like the credit card thing?
Yeah.
Yeah. Basically, you say, open your phone. I'm at CVS. What card?
I remember. Yeah.
And then get this, like we're making the jump into crypto. And I was like, shit, I better start reading.
I know nothing.
Neither of us knew anything, but it was just some research, talked to a few other people, and it just made sense to do it at the time. So made the jump and didn't look back.
Yeah, 100%. Kyle's like, what are they talking about?
No. I always like look back and I'm like, could I have juggled both in terms of having a 9-to-5 plus doing the entrepreneurship? But at the end of the day, you got to pick one and go all into it. It's like, do I want to have a 9-to-5 and have a more like chill life, or do I want to fucking unlock my full potential?
Yeah.
And I think
he
that's what it comes
dropped out of
down
school.
to.
Oh, no.
Yeah.
So like
My sophomore year.
I told the story a few times on the podcast. So Amit put me onto ecom.
Okay.
You guys like make sense.
Yeah.
And then I put my buddies onto ecom through Amit. Like I came home one summer and I was like, yo, check this out. And then
What summer was this?
Like first summer, like 18, like
Yep.
like what was that, 2017, 2018?
Yeah.
I come home, I told my buddies, and some of them were like, yeah, some of them were like, He was like, 6 months later, he drops out of college. He's like, yo, I just did like $250,000 this month. And I'm like, how? He's like, oh, e-commerce. I was like, yo, it's real. And he was like, yeah, it's fucking real. And then he did like a few $1 million months and like, yeah. But like, school's not for everyone, work's not for everyone. So like, we get it. You know what I mean?
I mean, ultimately, like you're talking with your boys about it. I mean, like that's like it's in all the conversations. So at the end of the day, like you want to work for yourself. You're gonna be miserable if you're not, and like just make the jump.
100%.
Yeah, when you're in your 20s, you got fucking nothing to lose. So for me, it was kind of like my parents wanted me to obviously stay in school because they wanted stability, because they came from stability, and then it was actually through my dad creating a business and then like having that get fucked and crumble and like them losing all their money, that he was kind of like, now he had the taste of both, where he had the stability, he had a business that was doing very well, and then it didn't do very well. And it was like, he was just like, for you, I want stability. But if you want to go this entrepreneurship route, don't do all of these things that like I did that caused the demise of my company. But they were always like on the fence on both sides, where it was like, yeah, we want you to stay in school and like do both, sure, but stay in school. And I was just like, listen, I got to go all in on this if I want to make it work. And I can go back to school whenever I want. Same thing with a job, with a 9-to-5. It's like, if you leave and you pursue whatever you want to pursue for 3, 4, 5 years, you can go back to that whenever you want, but you don't always have the opportunity to capitalize on like a market trend, like crypto, Web3. Yep. And like if you guys were like, I'm gonna wait like 2-3 more years until I have maybe a little bit more in the bank, a little bit more stable, a little bit more that I can invest in it.
It's so funny because I was telling you those exact words. I was like, yo, get a little more money, like.
Dude, it's the excuses. As soon as you make that first excuse, they just start compounding, and then that's why people end up like never leaving, because I'm at my job for 3 years. If I stay for a few more, and it's like
my equity starts vesting more.
Yeah, exactly. So it's like you just like before the excuses can even come, you just gotta like cut it cold turkey. Like, I'm just gonna go.
Yeah. Even the excuses, I don't think are the biggest thing. It's like you wait a few years and then you get married and you buy a house and you buy a car. And
you have a kid.
And now it's like you can't quit.
Mm-hmm.
You got dependents. You
gotta fucking jump off the cliff and just build the parachute on the way down.
Yeah.
Literally. So you guys started building a parachute over there. So like, what happened next? So you guys like, he's like, yo, Web3, and then we made a PowerPoint.
It's different, or at least the approach we took was different, where we built a demo and just started networking around. And obviously, like, how it went with Chris Quinn. Chris Quinn was the first investor.
Shout out Chris Quinn. You're coming on here eventually.
Yeah, you got to get on here.
Yeah, I've heard that name too many times for him not to come on.
What happened?
I said I've heard that name too many times for him not to come on.
100%.
Now he's obligated.
He's the guy.
Yeah. So you introduced us to Quinn. He had a blast talking to us, I guess. He introduced us to a bunch of people that he knows.
Yeah, really made the whole thing happen.
Introduced us to who they know. I mean, that's how VC world works. They don't really invest alone. They invest in herds. So they introduce you to who they know. If they can come to kind of come to consensus on you and what you build and you as founders, then they tend to kind of give you the deal. And
so for the average person, what's a VC? First of all, people don't even know what the hell a VC. Like we know because like we went to Berkeley. Like like what's a VC?
What's a VC?
Yeah, like a venture capitalist.
A VC is a venture capitalist. Their job is to invest funds that they get from LPs or liquidity providers.
Yeah. Limited partners.
Dude, we were at like a VC happy hour the other day, and they're talking like margins and all this shit. And we're like, bro, I just build shit.
TVL is this. I'm like, what the fuck is TVL? Like, oh, I'm in AUM.
Like, wait, sorry, we're too degenerate in the crypto space.
Pretty much like rich people give other rich people money to like find them ways to
or not rich people. Like rich people could also give not rich people money.
That's fair too. That happens.
What's up, New Money Talks fam? Quick one for our sponsors over at AdCopy AI. Tony Mastalone and his team have produced one of the most revolutionary marketing tools to date called AdCopy AI. And what it does is essentially harnesses the power of AI in order to lead your acquisition systems and strategies for your marketing efforts, right? So whether you're selling physical products or digital products, it is much more tailored and targeted for marketers relative to something like a ChatGPT. And I want to really quickly show you how it works. So let's say my buddy's company, Javi Coffee, he wants me to run ads for his brands and populate ad copy. What I would do is I would come over to the AdCopy AI Chrome extension. I'd click create Facebook copy and I'd provide some inputs, right? So this is the input category. So this is going to be javicoffee.com. Target audience are going to be young Starbucks addicts. And then, you can also have selling points populate directly from the product URL. And they have something called a creativity amplifier, which is really unique. So the more creative you make it, the more kind of obviously creativity they can pull into the copy. It might not be incredibly accurate for what it is that you're going to be selling. And so you have to kind of play around with the creativity amplifier, right? So if you make this very low, it's going to be a very cookie cutter response depending on your inputs, right? So it might be like regurgitated, but when you have the creativity amplifier up, it gets very, very creative and it can spit out some really cool outputs, right? So I'm going to go ahead and click on generate Facebook ad copy, and we're going to let AdCopy AI do its magic. Boom. So we have elevate your coffee experience. Tired of the same old Starbucks routine? Meet Javi Coffee, your new coffee obsession. Crafted for true coffee lovers, our premium microdose coffee concentrate packs a punch of flavor and energy in every drop. This is so good. This is something way better than what I could do. Honestly, what any other human could likely do. And it generated that in seconds. And pretty soon they're going to have an update that directly imports this into your Facebook ads manager. So you don't even have to leave the platform, right? So shout out to Tony and the team over at AdCopy AI. Definitely check out the link in our description if you're interested in getting this for you, for your brand, or for your agency. And make sure that you tell Tony or you tell the AdCopy team that New Money Talks sent you so you can get that New Money Talks discount. Now back to the podcast.
Sometimes too, yeah.
But in like the standard sense, a venture capitalist's job or a venture capital fund's job is to take money from rich people, invest into companies to then blow up and give those rich people back
more money.
Yeah. While also taking what's called a management fee. So
that's how they make their money. The 2 and 20. Yeah. 100%.
2 and 20, 3 and 30. I guess it's going up.
No, it's going up.
Inflation, man.
Inflation.
But it's like instead of investing in like stocks or in a traditional company, you're investing in a company that maybe is more of a startup style and has a lot more upside. But there's a lot more risk to that as well.
And like the model is like you invest in like say 100 companies in this space, like Web3 space, and like if one of them becomes like the next Airbnb, then it makes up for all of those losses in a sense. Plus way more, and you make a shit ton more on top of it.
They're pretty helpful too, especially in the tech space. A lot of them are pretty hands-on, and like they take bets on young founders. Obviously, we were 22 when we got our first check, and so it's like they're like operational support, sales strategy, marketing, and then like how to hire, how to like manage a team. So I mean, they do offer a little bit more than like just capital. I think traditionally it was just like here's your money and like fuck off and like good luck. But I think it kind of like as the Silicon Valley movement kind of came on, it started to become like an actual kind of like community. So it's been a pretty cool. I mean, you definitely get some bad apples, but
definitely.
For the most part.
So question for like the audience too, like to tell the audience, like how long does it take to raise $2.1 million? Like how long does that process take?
There's a lot that goes into that.
You get it all at once. You get it like
no, so it's not all at once. and it's really dependent on market conditions. So that's like the first thing we can talk about, where certain markets will be really, really hot. And so you can raise faster. You can raise at what's called a better valuation. So you don't dilute as quickly, which means you don't give as much of your company away, all these different factors. But for us, the market was really, really good and hot when we first started for a few weeks. And then it went really, really bad. And so it took us a while to raise. But honestly, all in all, it took us 6 months to close our round, which isn't that long. That's like an average turnaround. But we raised our first $1 million in 9 weeks. So it moves fast, and then something goes wrong, and then it slows down, and then it took a while to get those.
And does someone just write you like a big check, deposit in your account, and that's it?
No, the first little bit of the round was 3 people, or like 3 groups that kind of that took that little chunk. Chris Quinn being one of them, which was like awesome. But they all knew each other. They're all intro through Chris. They're all friends. So the whole $1 million comes from 3 people, I guess, in the first 9 weeks, but it's broken up differently, different amounts. 9 total.
Well, like for the 19, like when I was like 19, like I started the whole like Silicon Valley tech world. Like I learned like through Predictum and all this shit. Like I got it, and like I'm from Jersey, where like we knew nothing about this.
Dude, I grew up on a farm in Oregon.
You grew up on Oregon, like Sac, you know what I mean? Like
tiny town outside of Sacramento.
So like when you hear like 3 guys pull like $330K in a freaking random ass company, you're like, that's not
random
possible.
Kids too.
Random kids, right?
Yeah.
But like it's possible because I've seen it. Like I've seen the money in the account. Like it's a real goddamn thing. You know what I mean?
We were even talking about this today, like reflecting. Obviously, all that money is out there, and it's meant to go to smart, hardworking founders like us, like you, like thousands of others out there. So it's really not, I think, a good way to think about it as like, oh, this isn't real. Like there's no way this is possible, because that's what the money's there for. That's what the money is there for.
Yeah, 100%.
Yeah, and there's billions of it. And so
it's definitely like a challenge though, for sure.
Like, it's not easy.
There's so much that goes into it. I mean, like obviously like, the product, it all revolves around product. You need something that's actually gonna like return them the fund. That's like they're not gonna make the investment unless it's gonna like, of course not. Their return on it's gonna be like
because like these things aren't like a 2 second, like to make Peaze doesn't take 2 seconds. It takes it could take like 2 years. You know what I mean?
It took and then they don't want that. They're not looking for like quick flips, right? Where they're gonna like just even like 10x the company and then sell. Like
they want like 200x type of stuff.
So I mean like. And then like you have to go. So you get product one. You have to build the damn thing or have some sort of beta, like demo, something to show for your. Yeah, careful now. But then it's like the deck, how to actually pitch. Remember, we actually pitched you first. You were really? Like our first pitch, just like testing, like how the hell we were.
I remember that. Yeah, you guys were doing the PowerPoint with me and like the deck and everything. Yeah, just give feedback, you know.
Which honestly, at the end of the day, is bullshit. Like
not your feedback.
Not your feedback. Your feedback was epic, but like the decks, like I don't think for.
Oh, interesting. No, talk about that.
Yeah, we had 126 like VC calls and 9.
126.
Yeah.
There you go. So it's not like the first 3 people give you millions of dollars.
Yeah.
Took 126 conversations.
Yeah, and 117 no's. So it was like.
Those were conversations, not people that we sent our deck and our information to. So we probably were in contact with 300-400 VCs.
Damn.
Of which 9 invested. So do the math. I don't know. What is that, like 0.3%?
So like 1 a day for a year kind of thing. Like maybe 2 a day for half a year.
Like 3 or 4, like, and like 2 at the same time.
And they keep shitting on you saying, go fuck yourself.
Yeah, but I mean, at the end of the day, like the deck is like an intro. It's like when you email someone, like it gauges like interest. You're not actually like sitting there like clicking. Like I think that's the one thing about like entrepreneurship and business classes in school that they get it so wrong. It's like you have demo day. You're gonna sit through and like click through your PowerPoint like you're in 4th grade, like you're doing like a speech in front of your class. Like it's more of like an organic conversation, sharing vision, and like actually showing that you understand aside from just a few bullets.
There's a lot of psychology to it too. Because I remember this one. You guys asked me like, when they tell you valuation, what do you say?
Oh yeah,
you guys the
market. Oh, every single time. So and then they laughed at us
because they know what you're doing right there.
I remember one of our like good friends now and like early investors, Blaine. Like we were I was sitting around getting coffee with him
in Miami.
And this was right after we had talked. I mean, I think we had this.
This was April,
early April, it was like April 5th. And like he was like, so you know, what do you guys think in terms of valuation? I was like, oh, the market will price us. And he literally just starts laughing his ass off. He's like, who the fuck did you talk to? I was like, oh, well, you know, my buddy Johnny knows Chris, he knows the barber, he knows the.
So pretty much it's like, Because like the valuations, like say you get valued at like, I don't know, $5 million and they give you $1 million. That means they're going to take 20% of your company, right?
Yep.
So that's why you don't want to say the valuation, because like the VC might be thinking it's worth 10 million and you might be undervaluing, be like, say 5 million. So then you literally lost like 10% of the company with like a stupid conversation. So I told them, I was like, when they ask you the valuation company, just be like, yo, the market's going to price us. And a real VC knows, like, damn, these kids know the stupid answer. Because, like, think about it, like, literally, like, a split second can make a 20 minute valuation or a 10 minute valuation. And now, literally, you just lost, like, half of your equity off a stupid comment. You know what I mean?
Like, you never want to make the first offer.
Don't make, exactly. It's like simple, like, negotiation, simple, like, game theory. Like, you play that game, and, like, when he laughed, like, he's like, all right, like, we got a winner over here.
I mean, it's easy to create an idea of what a valuation would be if you have prior sales and, like, business momentum.
You guys didn't have
you guys had nothing.
Well, and that's what happens like Series
right?
A's and, like a true, like, I don't know, we did, like, a first money in round, like, pre-seed, seed, whatever you want to call it, but, like, later on rounds are always
like equity versus price round.
Actual math, not like just here's a number.
I want to ask you guys actually something people don't talk about in like this is like more like tech podcast we've ever done, so it's kind of interesting. People don't talk about like the paperwork and the lawyers and the money. Like you guys use VJ, right? You guys are good with that?
Yeah, he's great.
Like
talking about Monday.
So like talk about that, because like it's not just like, oh, like God gives me money and like I have money now. It's you have to do a whole bunch of like paperwork back and forth and signatures and wires. Like what does that whole process look like?
It's it actually wasn't. I mean, like there's so many tools out nowadays. Like we use Clerky to like actually like incorporate the whole thing, get started. Like Stripe Atlas has their product functionality, but like really there's like the safe. It's like how to raise.
What's it called? Clerky? We should get a sponsor on Clerky. Clerky, we're coming for you.
Clerky, it's just like an incorporation tool. You pay like $700.
It's like Gust, this type of thing, like Gust Launch or whatever it's called. Like
they take care of like all of like equity, like the paperwork and whatnot. And then I mean, really for like a safe, it's like a standard YC document that came out in like the early 2000s. It's just like you don't really change any of the like anything that's in the document.
Just like status quo of the industry, pretty much.
Yeah, you just send it like it's like you basically send out with valuation the amount that they're gonna invest, signatures, and then they call you, confirm wire details, and you're done.
It's so simple. It's crazy how simple it is.
Yeah, is that like an ink file or like a LegalZoom? But if you're raising, like
what
that company,
like, no, it's like what's the company like to make an LLC like for $300?
File.
It's like
that, but for incorporating,
or for like making like Delaware C corps, pretty much. So like also they don't make LLCs, they make Delaware C corps because like tax purposes. It's like you need 10 million shares and like all this crap. I know all the crap. Don't, if you're doing a Shopify brand, don't do that. Just make an LLC. It makes it a lot easier. Funny enough, I have a Delaware C corp, and that just like screwed me when I just made
really? Why?
It's just a bitch and a half, because like then you have to do like the franchise tax in Delaware every single year. You have all these vesting shares, so like taxes are different because it's not a pass through income. So like it's like taxes like a C corp type of thing. It's like a whole bunch of different things.
File your 83B.
File your 83B. That screws up your taxes too. Only do that if you know you want to raise money from VCs and stuff and all this type of stuff. The other piece of advice too that I think we had on the last podcast was like, don't just incorporate right in the beginning. Like, when did you guys actually incorporate the business?
We did.
We did do that. Why? What was the reasoning not to?
Well, because like for example, like we haven't even incorporated like a podcast, right? But it's like there's no reason, like if you're not making like bringing any income in, like why am I even like gonna waste?
It depends on what you're trying to raise or like the speed at which you're generating revenue.
Like how much before you guys raise money did you incorporate? Like
we incorporated in October. We raised in April, and it's like
oh shit.
But I mean like it was
you guys were ready with all the paperwork.
Yeah, just getting in place.
And ultimately like it worked out because like that was like in the going through diligence, like how it will show me all like you kind of got everything organized.
Yeah, got you.
Okay, but you guys knew it's something you want to build up. Like I guess that advice is more so for people that like they want to test out a business and they might not be in it like long term.
There's like 19-year-old kids starting a drop shipping store right now that like
worrying about LLC.
$300 making an LLC. They won't make a bank account. They have no sales, and it's like like. Don't worry about that. Like,
just figure it out as you go.
Well, you can still do that like in our position too. Like, we could have gone like the accelerator route, like through like there's a ton of like Techstars and Berkeley Skydeck that you did. And like they'll help you through all that. Like, you just need to come with them with an idea. They're really there to like hold your hand. YC is more like not YC. Like VC is more like on your own. Like you're you're in the mix.
You know Moise Ali, right? You guys know Moise Ali? He sold a company for like $100 million, like a deodorant company.
Native.
Native deodorant.
Yeah.
His brother named Sully, like Suleiman Ali or something like that. He's like big in like SF tech scene or whatever. And he was saying like he had a company that he was raising a bunch of money for. He incorporated it an hour before the first wire got sent to his fucking account. He's like, oh, the VC was like, what's like the bank account? He was like, give me a second. He's like, give me a second here. He's like, yeah. So like
nowadays you got like fucking Mercury. You can make a Mercury account.
Yeah, Mercury account in 2 seconds.
Oh, I don't know. I don't know how that's going right now.
No, that's probably
banks are scary.
Banks are scary.
Yeah.
I feel like I would trust digital banks more than I would physical. Like, I don't know. That's just me. Like,
I just trust Chase and Bank of America.
Yeah, Chase.
Chase is not fucking going anywhere.
No.
Hey, you say that. You never know.
Too big to
You never know.
Too big to down. Dude, I'm
fucking hell would break.
I'm coming like a doomsday prepping
100%.
company.
We're getting there though. We're getting there.
100%. So you guys rate 2.1, like all VCs, angels, all this like good stuff.
Yep.
And then what happens? Like, what happens next?
I mean, you're like you're raising, but you're still like running a company. Like you're still building product, you're still selling, you're still trying to like hire. I mean, as soon as we got our first check, it was like we got to build a team.
People.
Yeah. You definitely need a team, which I think is probably like for like young founders, like we've seen it from like our friends and then us personally is like just like finding a team, then operating that team is definitely like a fun but difficult learning.
It's the hardest part.
And these aren't cheap team members, aren't they?
Engineers aren't cheap. Software is not cheap. Yeah.
You're saying like 200 type of stuff, like 250s. Like it's kind of crazy.
Well, I mean, like when the starting salary for like an intro engineer at Amazon is 250. It's like.
Yeah. And then you were telling us about your friend who has ping pong tables and all this stuff and has to essentially.
You need all that stuff.
The mentality is like the best engineers in the world could choose to work anywhere. Why would they choose to A, work for you, for your product, and B, are you compensating them to be there? So it's two sides. It's like, do they feel like they're getting the non-financial incentives to work, but then also are they getting the financial incentives to work? Yeah. So you got to cover both. Which is really
you have to give them equity and all this stuff too, right?
Yeah.
That's like a whole nother piece of it.
Which you want to when they're building a company that's so young, from nothing to something, and putting in sweat and tears and 7 days a week, 6 days a week.
9 p.m. like
meetings, there's no such thing as like the 8-hour day. It's kind of just like stuff needs to get done. And if that takes 100 hours this week, but maybe it takes 50 hours next week, but it takes 70 hours in the week after, like keeping track of time and that kind of stuff all goes out the window. It's just like this thing needs to get built and the team makes it happen.
Definitely.
There's so much ownership, like as like those first few employees. Yeah, you feel good about it.
I'm curious, like we talk about like all the positives, but like there's negatives behind this too. It's like if you're someone who's like stupid talented, you can get a job anywhere. Are they ever like fearful, like, yo, this thing's not going to exist next year?
I mean,
have you felt that ever?
About
like have your employees, have you ever like had a conversation like that with your employees or like people like that?
Yeah, so we have plenty of runway, so that's not an issue.
Yeah.
And we're very transparent.
What's runway for people who don't know
runway is how much you're burning per month against.
What does burning mean?
Okay.
That's another thing. Losing money.
Yeah. So runway
people don't know what
is
the shit is,
how much you as a company are spending every month on payroll, on ping pong tables, on whatever you're spending your money on.
Software,
rent, everything,
salary,
food, who knows, against how much you have in the bank. So if you have $1 million in the bank and you're spending $100,000 a month, you have 10 months of runway. Easy calculation.
That's an easy
math.
Yeah, math.
Doesn't take a CFO to do that one.
No, of course not. So like, it's like back to the thing of like, I'm sure these engineers aren't like, yeah, well, I'll leave my job at Facebook to go work at this company that started like 8 months ago. You know what I mean?
I mean, ultimately, you kind of like people that go to work for startups are like ones that want to be in that.
Like they know the risk though. They know the risk involved in all this.
The risk reward is in the same boat as the VCs who are doing it, as founders who are doing it, as everybody, right? It's like, look, my however much equity and all this amount of time that I'm putting into work into this will be worth a ton if this thing that I'm building and have ownership of takes off.
They're pretty, I mean, I would say like it's in the engineering space, you're de-risked a little bit because like being such a talented person in the space, you're always going to be able to get a job at a top-notch like tech company or another startup. So like,
a lot of demand for you.
And these tech companies love employees that work at startups because said employees at startups have had so much ownership and they're more of a leader. So there's been kind of advice pieces in this space where if you're, especially early in your career, go to work at a startup, you're not going to go to like an Amazon or a Facebook and be like an entry level or like one above that. Like you'll shoot straight to like middle or top just because you've had so many years.
But you could be a CTO, like
you're a lead engineer at like 24.
You can take so many paths. Like if you go to, let's say, Amazon or Cisco and you work there, you're kind of like just in the ranks of like, okay, maybe you can jump one step up over here at Amazon and then one step over here up at Google. But if you work at a startup as an engineer and you do whatever you do, there's so many paths you can take. Now you know what it's like to start a company, or at least be early, so you can do that. You can jump to a higher position at Google. You can fuck off from engineering because you don't like it. You can do whatever you want. Whereas with any standard engineering role, I think your path is just pretty narrow.
100%. How do you guys split roles between what each of you guys do too? I'm curious of that. Like, what do each of you guys do?
Yeah, that's evolved a lot. I think at first, when it was just us two, it was like I was coding and he was doing basically everything else. And we would cross communicate, and like product decisions would cross communicate. And then it's evolved into, we've hired a team of engineers who are a lot better at what they do in coding than any of us could do. So it's good to delegate that to where the talent is available. And we just lead product, maintain comms with investors, maintain
like
finances,
sales and partnerships,
B2B, kind of, all that.
You get to push the vision more. I mean, you're kind of like hand holding the vision early on, where like you're in line with it. Whereas like when you have the liberty of having a team, you get to be a few steps ahead a little bit, long-term planning and kind of like queuing up where you want the company to go. And like, meanwhile, making sure that it's kind of like heading in the right direction, which is like, then it becomes fun. Cause then you get to start queuing up some like more fun conversations. And then further you get into the business, you guys should get more established in the industry. I'm sure you guys know how it is. Like when you've been there like the longest, like your name isn't like unfamiliar anymore. And you can kind of start to
because a lot of these companies just fall off, and if you can just like keep it going, you know what I mean? Like
especially in crypto and Web3, it's like if you've been building it, they see you at the same conference a year later, they're like, okay, like these guys, they actually
that's true. Yeah.
Well, it's such a dogmatic
industry. It's not just a pump and dump. This is like a real thing.
Like people that are building crypto on like Web3 like really believe in the tech that's getting built. Like they call it like PhD brain right now is like the whole like industry.
What does that mean?
PhD brain is basically like you're stuck in like research mode, research and like build. So like they're basically like developing all the like these protocols and this infrastructure. And there's not a lot of like thought outside of like the product like specs. And so, but like they all are super passionate about it, which makes it kind of fun to work in because everybody's excited about it. And what we kind of are bringing into the ecosystem now is like user focused, app focused, product focused, where they can kind of start seeing what they've been working on for so long actually start to get used, which is, I think, what we're pretty excited about.
This is probably a good ass time to be growing like a Web3 company where everything's like quiet. Right? Does that make sense or no?
Dude, it's anything but. It's so loud. It's so crazy. I mean,
really?
You have like,
it's
just regular.
Like a year ago, it was like Web3, like NFTs, crypto was just like up.
I think externally it was really loud, and now externally it's quiet. We're in the crossfire, so it seems like it's loud, but I agree, it's a good time to be building
because like it's gonna pop off again. Obviously, like who knows when.
Well, I mean, like it's like. I think previously it was, you kind of saw some of the really loud noise that was getting built in the space that wasn't actually valuable. Meanwhile, like all these like PhD brain people, like really smart people that are doing cool shit are like, we're still building in the background, like getting ready to launch something that was actually valuable, actually secure. And then that next wave is going to be when like it started to actually disrupt traditional infrastructure, traditional technology. And you're going to see more Web3 stuff come out because of that.
And really, I think the way we're going to see it is that users won't know that there's like this transition. There's not this big jump like, oh, now we're from Web 2 to Web 3. Yeah. It's just like you're using normal things. You're using Facebook, you're using, whatever. But like under the hood, the infrastructure that powers that software and the way that the money moves, the way that your information, your data moves is all going to be blockchain enabled, crypto enabled, and therefore Web 3. It'll be a silent, slow change. That's kind of what I at least.
So it's like rather tipping on YouTube with like dollars, you can like tip with like ETH or some shit, and like Peaze would power that.
I mean, it could still
it'll appear like dollars. It'll just be under the hood. It'll be digital US dollars that now no longer have to go through like a middleman or any kind of like escrow or anything like that. It's direct peer to peer. So, for example, YouTube would have their wallet. I, as a user of YouTube, would have a wallet. YouTube would deploy what's called a smart contract to handle the transition between the two, and all that would happen.
The transaction
and the transaction would pop up, and under the hood, this is all happening. The user doesn't really know. They say, "Okay, I want to tip," and they hit confirm. What happens is, a transaction has just been signed on the blockchain. The funds, the digital currency, will move from the user's wallet into the smart contract, and then the smart contract has the code to say, okay, these funds were meant for YouTube, and it goes into YouTube's wallet.
And then you're the piece that powers that shit.
So yeah, we enable a user to make that payment to the smart contract in YouTube's wallet, for example, without having to buy crypto, have a wallet, swap into USD currency, all this kind of jargon, essentially.
So I have another question. So how do you in a sense, how do you become the Stripe of this industry? Actually, what's your actual vision? How does this work? Obviously you need to raise more money. You'll have to go to market, all this type of stuff. What does that actually look like?
Yeah, that's a good question.
Do you guys ever think
go to
about
market? Is that the go to market?
I guess kind of, because at a point,
are you VCing us right
now? No, I'm genuinely curious. VC fun. Because my whole life is just goddamn sales and fulfillment. It's a little different. And I'm always, when I'm talking to you guys, I'm always like, yo, what's your revenue like? How many customers you guys have? And it's a little different because you're oh, we're still building this fucking thing. You know what I mean?
No, actually, I thought of a good way to answer that question. It's really not that different. So you and your success of what you're building depends on the brands you're working with making sales. If your brands don't make sales, then how are they going to pay you? They're not even going to have anything
on the platform.
Right. So if they don't succeed, you don't succeed. And likewise for us, people building Web3 applications, if they don't succeed, if their apps aren't good, if they don't have users, then we have nobody to service in the end, and it's a lose-lose for everybody. So in the same way that you succeed because they succeed, we succeed if our customers, those developers, succeed. So there is a huge bet that we're making and that our whole industry is making that Web3 is actually valuable, something that will actually change the way the internet works for the long run in a mass kind of change, not just a few 10,000 people kind of doing this thing. Does that make sense?
Millions and millions of people.
Yeah. So it is a bet that this will be a big thing eventually. And we're pretty passionate about.
But pushing this even further, how the fuck are people going to find you though?
So that's the thing, they don't have to find us. Basically, it's up to we're working hand in hand with companies.
How do the companies find you guys?
Yeah, you're B2B, so you get that. I think it's right now there's ecosystems within Web3. And I'm trying to find an analogy of how to compare ecosystem like Polygon, Optimism, Arbitrum, Ethereum, these different ecosystems.
It's like Shopify or Squarespace.
And the Shopify app stores.
That's a good example.
Will you be doing a lot of marketing one day? I'm very curious of that.
One day, yes.
Yeah.
One day, yes. But right now the ecosystem's so small that you don't have to. So the example, you just said, Shopify is good, where Shopify has a bunch of stores on them. So if you are building, let's say, a software for Shopify and the stores on there,
the app store,
if you go to Shopify and Shopify likes it, they can distribute it downwards. It's a top-down kind of approach to B2B sales. That's how we're taking it too. So
same how Stripe's in their app store. It's the first thing you do when you build a Shopify app is plug in Stripe.
Yeah.
Same thing for us, but with actual
I see what you're saying. You guys should make a Shopify app then.
We talk Shopify.
Yeah. Oh yeah.
And there are Web3 companies that are plugged into the Shopify store and whatnot. Third Web has a shop kit.
Yeah,
Shopify kit, something like that.
Stripe for NFTs on top of it.
Yeah. So you can plug in NFTs into your Shopify store.
You guys should probably solve the problem of chargebacks. Think about that. You ever think about that?
Dude, chargebacks is
no, but with the
how so? What are you thinking?
Well, you have all this smart contract and shit.
How the fuck does that work?
So you're confirming that that transaction happened and that's real as hell.
It's not bullshit.
It's not bullshit.
Fraud.
Yeah, crypto definitely solves that. If it's crypto based.
Dude, chargebacks are big. For example, we were talking about this before. We've had clients charge back before. Big amounts. And in e-commerce, you have a lot, you get chargebacks, you know what I mean? You guys could probably solve a lot of that. That's a massive industry.
Yeah.
Have you ever no bullshit? Have you ever thought of that?
It's just a regulation thing.
I guess a question with that also is is there a way where you the customer can pay with a credit card, but it can be processed in crypto? That can't happen, right?
No, so that's
what we do.
That's exactly
the bread and butter. That's the bread and butter of what we do.
That's stupid. So the problem is right now is that you're still reliant on the credit card company. So I was talking about on-ramps earlier, right? There's companies called like MoonPay and Wire, the two kind of popular ones. You basically have to use your credit card to buy crypto in those, and so that's where the chargebacks are still happening. So early on in our product, we're going to be pushing ACH in a big way.
You can't charge back.
Well,
I think you still can.
No, you can't charge ACH. You can dispute it, but it's a little more difficult.
Yeah. Well, it's the failure, especially with the regulation right now. Fail rates are low on credit cards. So if you go to buy crypto with your credit card, you're probably gonna get declined 55% of the time.
Wow.
So actually,
really?
Yeah. So it's just the way because chargebacks are so high. because you're getting a lot of people that are buying crypto.
And it's a high risk industry.
Yeah, but and so once you buy, you can't return crypto.
Yeah.
Like if you can kind of do some manipulation stuff with orders where you can pause the order. Like if you get ETH in your wallet and you say that like I didn't pay this $100, well, you get that $100 back and that ETH is still in that wallet and it's not going anywhere.
Damn.
Because that's like the way of
popular scam.
Yeah.
Oh really?
Yeah.
That's crazy.
But that's like where ACH comes like a little bit more, where it's a little bit more direct. There's not much like more of a risk there, and honestly, it's easier. It's much easier to just connect with through Plaid and then transfer that way.
So you guys are making money through processing fees?
Yeah. Yep.
We also charge like a per user SaaS fee.
Yeah, and on the back end, like you're charging the companies though, like every time like they're pulling the data, whatever bullshit it is.
Yeah.
Whenever like they have like an active user, so like say like you use an app, like we charge like a little bit for
and the processing fee on top of it. That's smart as hell.
A little double dipping.
Double dip.
Yep.
That's the best.
I think that's most most credit card processing with like even with physical businesses or digital businesses. There's a percentage that they can make
2.9 20. It's like you can't avoid it. I mean, even for us, like when we eventually inevitably do credit card processing, like Chase, all these guys are taking that 2.9 20 cents on
Visa,
Visa and MasterCard are all taking.
All you guys have with some good processors. They'll go 2.4 and like 10 or something.
That's interesting. No, we could would love to learn how we could service the e-com space.
Dalen, Merchant Processor Pro is my good friend, or like payment processor, whatever the hell it's called.
Yeah.
No, like even the payment processing world is very interesting. Yeah. So there's like I don't know what it's called, but like pretty much how there's like two ways it can work. So like Stripe makes more money on different types of credit cards. I don't know if you knew that. So like every type of credit card charges a different fee to like Visa.
Do you mean like Visa, like the networks?
So like for example, on Amex and like a Discover card, there's two different costs for like the processing. Sense. Yeah. But Stripe charges the same amount of money.
Yeah.
So like one might be 1.5%, the other one might be 2%, but Stripe's taking 3%. Exactly.
Yeah.
So it's like you can go to like other like lower market payment processors and like they have different deals. Like I found a payment processor, right? It's like, well, if a guy processes it with like I think he called it like plus 1%. So it's like anything plus 1%. So if the Discover card is like 0.8%, you're gonna get charged 1.8%.
Yeah.
You see what I'm saying?
Yeah,
so it's like a lot of ways you can like really figure that out. Yeah. And like, for example, Shopify. Shopify is powered by Stripe. Their payment processor is Stripe.
Right.
Like Shopify payments, they're not paying 2.9%. Obviously, they're not paying. They negotiated the hell out of it.
They have a deal.
They probably pay 2.2 or even 2. You know what I mean? Because like they have all the volume going through, so they can obviously have a deal, right?
Yeah.
There's a lot of ways.
Or they're just like splitting the profit.
Or that's honestly even that.
You see a lot of the rev share because even Stripe has to cover their costs.
Yeah. Oh yeah, they have costs like Visa, Mastercard's up there for everything. You know what I mean?
I think the base cost. So when Stripe is doing 2.9 and 30 cents, don't quote me on this. I know it's one or the other. Either the true cost that they're incurring from the card is 1.9 and 30 or 2.9 and 20. And Stripe's taking like the difference there.
But every single card is different though.
Right. And that's what you're saying. So some cards are cheaper, Stripe will make more on that, but they're just trying to keep it streamlined.
Because like Amex, Visa, MasterCard, Discover, they'll all have like different types of fee structures depending on the card. Because like some cards are like higher risk than others. Like if you have a Discover card, it's like it's an easier card to get, meaning like it should be a more expensive. You know what I mean? Like that's how that crap works. Yeah. Very
like,
interesting.
Dude, like when I was in Europe, like nobody wanted to fucking take Amex in so many different places just because the fees that the business incurs with Amex is much higher. Yeah.
What's up, New Money Talks fam? We just want to give a quick shout out to our sponsor, Scale Brands. This is a self-plug because this is my direct-to-consumer marketing agency where we help D2C brands grow through paid advertising and brand growth consulting. And I can confidently say that we are among the best at what we do because I've actually built my own brands to upwards of $1.7 million a month. I've built multiple brands to multi 6 figures per month as well. Very, very profitably, might I add. And we are specialists at helping brands grow. So if you are an e-commerce brand and you are looking to streamline your ad creative acquisition, you're looking to grow your paid acquisitions channels, and you're looking to be able to implement systems and frameworks that are backed by over 8 figures in profitable ad spend and close to 9 figures in attributed direct consumer e-commerce revenue, then Scale Brands is the agency for you. So again, if you run an e-commerce brand or you know someone who runs a direct consumer e-commerce brand, send them over to scalebrands.com and make sure that you tell them that New Money Talks sent you so you can get that New Money Talks discount. Now back to the podcast.
Like cool by like a percentage or two.
What's cool about that though is that fee that you're talking about there is flipped in Web3 currently. So in like traditional merchants, like you go to the store and you pay $100 for something and you swipe your card.
The company pays, right?
Yeah, the business doesn't receive $100. Like they're getting
like 98
cut, like whatever, Square, Visa, this, that,
and then you got to pay sales tax and all that shit on top of it.
And then you pay to the government, and it's like all this money's flying around.
Right? You have gas.
But yeah, so there's gas and all these transaction fees, and like with the on-ramp that Parker was talking about, the end user incurs everything. So if you're a Web3 application and you want to sell something for, let's just say $100, well, let's say gas is $1, on-ramping is $2, blah, blah, blah. Like your total as a user is now 103. And then you also have to pay tax at the end of the year on the crypto.
Yeah.
So it's a kind of different dynamic and like different, I guess, business model to navigate, which has been interesting.
That's probably a good space to be in tax for crypto right now too. Like that's probably like so confusing. Everyone's
there's a few of those players in the space.
Yeah. Plus, it's not even like hashed out either. Like at the end of the year, the tax environment for crypto could be entirely different.
Yeah, regulation's not settled at all, and it's just like it's heating up right now a lot. I don't know if you've seen like Elizabeth Warren's. What is it?
She's building her anti-crypto army.
Yeah, her army against crypto as her new kind of
recruiting boomers.
Who knows?
Say it again. That'd be a good clip. Elizabeth Warren.
Elizabeth Warren's building an anti-crypto army. Vote Elizabeth Warren 2024.
I think another interesting thing that people can learn about is staking. We were talking about it before, but like there's like a some guy you said like a lottery crypto company or something like that.
Yeah.
Like run people through that and also what staking is, because I think like some people can make some yield on their money.
Oh, you got the terminology down. Yeah.
As opposed to
about it.
Well, like
yeah,
APR.
I mean, so like
rather than go be in a bank, you can make like 8% staking somewhere. You know what I mean?
Dude, some of them had at least at one point they had like 50% or 100% or 1,000%. Like, how is that possible? And how long does that last?
I mean, that's like
Ponzonomics.
Those days are done. Those are Ponzonomics. Ponzonomics. I mean, so staking basically is like when you as a user have like the base token of a blockchain, and you basically lend it to these chains to then prove like in like these validators and like allow the blockchain to continue to run, and they basically pay out like a certain amount of like fees for the funds that you.
It's almost like a dividend, but for crypto.
It's like you're borrowing out crypto.
Yeah, and like in the Web 2 world, basically Amazon has a warehouse of computers, and Amazon bought all those computers and pays to run all those computers.
AWS.
For example, AWS and all that, and that's what powers most of the internet. Like, and I mean, Facebook has their own servers and stuff, so they do their own thing. But like Shopify and all that, I don't know if Shopify has their own servers, but they probably don't. It probably runs all through AWS.
Even Stripe has an AWS. Yeah.
Well, in Web3, ideally, the way it's supposed to work is that random people all over the world have computers that they give up to the blockchain, and in return, they get crypto. And so when you stake, those are the funds that are kind of moving around the network. Now, obviously, I said ideally when I said this because that's not what's happening. There's big crypto companies that are node infrastructure providers that just run software through AWS, and then they're taking the fees for gas. So it's this whole twisted thing.
Interesting.
Ideally, it's me and you. We have a computer sitting in the corner, and it's beeping and booping, and it's making me Bitcoin. And like mining. That's what mining is.
That's like there's like we can get into all that. There's like different ways.
We got fans in the room.
Full blown.
Yeah. Actually, this is good for the clips. Talk about who's the guy with the curls and fucking
SBF.
Talk about that.
Sam Bankman-Fried.
What happened? How'd that like affect the industry and like talk about it? Like what was the name of his company? I forgot. Right? FTX.
He basically just like took. I mean, they were just like a TD Ameritrade or like anything like that. Basically, the way like a crypto like centralized exchange works. And he basically just took the funds that you invested in it and then like gambled them on leverage and lost them.
And his own hedge fund.
Well, he had two companies. He had FTX and then he had Alameda. And Alameda was a hedge fund that would take crazy risks on essentially what's called shit coins. So there's real crypto like Bitcoin, Ethereum, Matic, all these coins that are blue chips.
Prince Floki.
Sure. But
Jake lost like 10 grand on that.
See, that'll happen. I lost some money on like some weird coins too. It'll happen. Like in doggy poopy coin, whatever. It was supposed to go to the moon and then fucked me over. But yeah, so they were just taking people's money that you would deposit into FTX. Let's say you bought $1,000 worth of Ethereum. On your FTX account, it said you have $1,000 of Ethereum, but they took that $1,000, shuffled it right to Alameda. Alameda then was just placing, $5 billion, $8 billion bets on this and this and this. Eventually, because of a few things that happened in the crypto space. They had a massive, I think it was like $12-15 billion hole in their balance sheet, and then it came out, and then just everything kind of toppled.
So people wanted their money back, and the money wasn't there.
It wasn't there.
Yeah.
They lost it all.
So and that's like the difference between like when we say like the words like centralized and decentralized. So like these centralized entities, like those investments are just like hashes on in an Excel sheet, basically.
But what's a hash? Like,
I mean, basically, like
just
like,
data,
just
information.
Yeah. So it's just,
like how I was saying, like it says you have $1,000 worth of Ethereum, but like you don't. They're just showing you that.
So it's just like literally a number. On the screen.
That's like all of us in the money in our bank account.
Exactly.
Well,
That's
so
the whole thing.
That's the whole reason that we have this vision for like a decentralized, like self-owned future is like when you are investing in a decentralized exchange, so you're interacting directly with the blockchain, you own every single like coin that you are buying.
Like those numbers in your wallet, like that's yours.
Yeah,
like the bank
yours.
isn't like going and investing
yeah,
that
no,
somewhere.
yeah, 'cause you can go check like the chain, like prove that like this wallet owns this amount of like crypto, owns this NFT. It's all proved. It's all open ledgered. So like you can
like if you have 100K in the bank and you go to the bank like I want all 100 grand right now in $100 bills, they'll be like
freak out.
They'll be like, we're calling the police.
Yeah.
Right? Like that was a good clip too. No, but like no shit. Right? Like literally, if I have like say $250,000 in the bank account,
you'll shut down the bank.
And I want it tomorrow, and I'm like, hey, I need. They're like, we don't have that money here. You have to make an appointment, and like, who are you again?
It's not really your fault.
Like, if you want to take the $2 million, if like someone was like, hey, I need $500,000 in cash to like do this marketing stunt. Like if like Kylie Jenner was like,
not happening.
It's not happening. You know,
they gave it to some family.
Mr. Beast. Huh? Imagine Mr. Beast.
Well, how did they do that?
How much shit he has to go through to try to get?
He has to own his own bank probably.
What happened? On his own bank.
Oh, because he has to. I mean, he has to have that cash.
Well, because he needs like 100 grand liquid, like for the videos or whatever.
You know what he said that he does? Like he openly expressed that he'll actually take fake money in like the giveaways, and he'll say, "Oh, win $100,000 in his fake money." But then at the end, he'll have to like write them a check, or he'll have to like wire the money. So he doesn't actually give out cash
because you won't get the cash.
No way.
You can't.
No way.
So that's what you get. That's
the
Web3
you can just
crypto.
like copy and paste their wallet address and then just send it to them.
I'm always scared of this though. What if you put the wrong wallet address?
It's lost.
Yeah, gone
Yeah,
forever.
I think I did that once, but it was with a very small amount of money. Fortunately, I was like paying for like graphic design or something from an editor who's in like Sri Lanka, right? And otherwise we would have had to do Fiverr, and it would have been like way more fees. It would have taken a lot longer. So I sent like $50, and I like must have mistyped something. Just like never got to him.
Yeah.
And he like literally like screen shared his wallet with me. He's like, dude, like I'm not joking. Like I didn't get this. Like here's my wallet. Like all the transactions. And then I looked at the numbers. I was like, oh fuck, I must have like fucked it up.
Yeah.
Does that not like scare the world though? Like
no, it does.
Because there's a lot of fucking letters and numbers you got to copy and paste and make sure it's right.
Random ass block of numbers.
And that's ultimately like
the UI UX user interface user experience of Web3 is really bad, but that's essentially
where Peaze comes in.
Part of the reason
Peaze.com.
Peaze.com. Peaze.com.
Follow him on Instagram, Twitter. I see you guys
Twitter,
tweeting.
no Instagram.
Just launched a blog.
Just Twitter.
Yeah.
Also blog too. Nice.
Medium.
Nice.
Yeah.
Medium. Yeah.
The whole.
We're not stopping. I'm just like.
The whole setup of it all. It's kind of like I'd say it's a mind fuck, because if you think about AWS and all the computers that they control, and we're talking about like showing you that you have $1,000 but you don't, essentially like. If you own the computers that's running stuff and it's centralized and it's closed off, you can mess with those computers to do whatever you want. So AWS they could do whatever they want essentially with the information that's on those computers. But with blockchain and decentralized networks, all these computers around the world they're not owned by a single person. And so if one computer says, let's say you have $100 in your wallet, and one computer says, no, John actually has 50. The other computers are going to say, no, fuck you, he has 100. And that's what like the validator space does. And these computers are always talking to one another and making these computations to validate against one another's and basically cancel out bad actors so that the information, one, stays true, and two, stays decentralized. So no single entity like a bank or an FTX or anything
or
government can freeze your accounts, can lie to you, can do anything bad. So you put your trust into software, into software, into computer, into the infrastructure. And the infrastructure has been laid. So it's just a matter of people trusting nothing, right? Because you can't just give your money to Chase and you trust Chase as an entity now. It's really giving your money to nobody or anything. It's just kind of there and it exists in software.
Trusting that you actually own your own money.
And trustless, permissionless, decentralized networks is what makes blockchain and makes Web3. And it's like a concept that's a mindfuck, but once you get it, it kind of clicks. It's like, oh shit, my money's mine. If I have $1 billion in my wallet and I want to send it to my aunt in Sri Lanka or whoever, nobody can tell me no because it's mine. Nobody owns it.
But Chase could tell you no.
So,
or charge you a $4 wire fee that takes 3 days.
Well, I mean, your family and their bank might not even accept it over there. So, like, even if your bank says yes, they may say no.
I'm gonna tell you the scariest thing about wiring. So I bought a house 4 months back. I had to wire.
Congrats.
Thanks. Yeah, I had to wire 300 racks, right, like that. Yeah. I'm sitting at Chase, and I'm like, type it in, types it. He's like, confirm. I'm like, dude, I guess, like, yeah, like wire, like number. I'm like, yeah, sure, like, yeah. I'm like, Joe, like my partner, I'm like, Joe, like, is he good? He's like, yeah, I guess, sure it is. And then he's like, okay, he clicks the button. I'm like, okay, so my money's not in my account. The money's not in that account anymore. What the fuck?
It's just in the air.
So it was like 3 days in the air, and
You're
I'm
just
hoping.
hoping.
I'm like hoping to God. And so I keep calling, like there was a escrow company. I keep calling, like, yo, like, are we good? She's like, oh no, we haven't received it yet. I'm like, yo, like,
You're sweating bullets.
I'm like, yo, it's like whatever, we're young. It's a lot of money. And I'm sweating, and I'm like, I was like, please call me when you got it. I go to the lawyers. He's like, did they get it? I was like, I don't know. No one called me, but like, I hope this solves all these problems. I think it does, right?
Yeah,
you get there within
blockchain.
seconds.
So with blockchain, like, okay, let's even say there was a 3-day period in crypto, which there isn't. Stuff settles within like 10 seconds to 60 seconds. But if there was, it's all obviously between all these computers in a public network. So I don't need to go to Chase and then Chase kind of look in the back and then tell me anything, which is kind of what situation you're in, or an escrow that looks over here and kind of does that. You can use what's called a block explorer. So you just paste in your transaction number or your receipt number or whatever you want to call it. And the information is public and accessible at all times. So if you were in that situation, you'd just be sitting there hitting refresh and it would just be like processing, pending, whatever.
Crypto
so you can see it at all times, and you can see like, oh, this is how many validators have checked if this transaction is valid.
Also, how many computers have been like, yo, this is a real transaction?
Yeah.
Okay, that makes sense. It's like pretty much like hundreds of thousands of people have been like, yo, this is a real transaction. Like, it's coming through. Yep. And then once you have a certain amount of like validators, and it's like, okay,
essentially,
this is legit.
Yep.
I like
Interesting.
that.
So like my question to you guys would be, like, what happens if all banks started adopting like a Zelle style, where it's pretty instantaneous, no fees? Like, if all banks adopt that and then they remove the limits, what would the disparities or the discrepancies between that and what you guys are doing be?
Yeah. So do you have anything off that? Because I'm thinking about Silicon Valley Bank now.
Yeah, I mean,
so these banks
are trusting. Yeah,
these banks are still giving out your money to, they do like loans for homes, and then some of them like SVB will invest in like government
like
bonds, blah blah blah,
with no revenue.
Oh, that all throwing shade. So yeah, I mean, if a bank is holding, let's say, $10 billion, and they bet on government bonds, and those interest rates raise, and now that $10 billion is worth $1 billion, the money's gone. So like, you're still trusting a centralized entity not to fuck with your money, and time again it keeps happening. So that's the biggest piece, is your money's really not your money, so even though you can move it around.
When you transfer that 10K Zelle, like, it's really just
but it's just digits on a screen. It's the whole FTX thing. It's like, yeah, you have 10K in your bank, you have 10K. Oh, the 10K is now John's. Now John has 20K. Is it really there? Like, they're just saying on the screen.
And they just hope to God at the same time, not everyone wants that money.
Bank run, yeah.
Pretty much that's what everyone hopes.
Because like when you wire 10 grand, like, there's not like a truck that's coming and picking it up from one bank and bringing it to the other.
It's not, not
if like everything made sense, that's how it would have to be.
That's what you would hope.
That's how
makes sense. Yeah. But that's not what happens at all.
Yeah,
just everything's on the screen.
Yeah, and also money's not real, right? Because the government's just printing it. So
yeah, it's fucked.
So yeah,
now let me ask you guys this, because you might have a better grasp of this than I do. If you print the entire, like, if you double the world's currency in like a year, right? You go from a supply of 100 trillion to 200 trillion. How is inflation only fucking 8%? You know what I mean? Like, how the fuck does that make any sense?
Is it actually? It's like, I mean, it's pretty archaic all over, and
government's the one that's kind of telling you what the inflation rate is. Like, who knows if it's actually, because they look at different things, like the price of like eggs, milk, and like chicken in like a few states or every county or something. I don't know. It's just some weird calculation.
I mean, it's kind of like the stock market. And like, you look at the S&P 500, and it's like, well, that's not an accurate representation of the U.S. economy, because it's like the better, more stable stocks and companies that there are. You're not taking the average of the market. If you actually did take the average of the market, it'd be fucked.
It's also heavily manipulated too by
100%.
By investment banks and all that stuff. So
and so when people, because like, you know, and I've asked people have asked me, and it's like, well, if the economy is not doing that well, then like, why is the market still going up?
Yeah,
you know,
2020 and 2021.
Yep.
It's like you could just throw $1,000 into Robinhood anywhere, just close your eyes, throw a dart, and the next morning you'd wake up and it would be like $2,000. You're like, oh shit, I'm a legend.
Freaking Wall Street bets. That was like the highlight of COVID.
Yo, Wall Street bets. What was up with that?
January 2021.
Yeah, dude. I was just sitting on the couch, like freaking day trading on
NMT and all this garbage.
Yeah, I was at your place and I was like, bro, I just threw a bunch of money into BlackBerry and Nokia. You're like, what the fuck?
Bro, it's like we just went back 2 decades. Like, it would have been a banger investment in 97.
Yeah.
Remember in 2020 when like COVID hit and like we were sitting in the triple?
Yep.
And we just watched CNBC all day and it was like negative 3,000.
Every morning.
And I was like, yo, I'm depositing all day. And you were like, what? I was like, yo, buy QQQ. I was like, buy Shopify. And you were like, I think you did buy.
Oh, you made me a lot of money. You made me a lot of money.
No, but then like it went up and then like now it's like here-ish. It's going to go right back up too. But like you have to hit people where it's like when they're hurt, bleeding, like everyone's scared as shit. And then that's when you hit. Like that's what I'm saying. Like right now, I think a good time in crypto for that. Because like maybe within like day to day, like within your friends, like it feels like all crazy. But like in the grand scheme of the world, like no one even talks about this shit anymore.
Yeah, like when the 18-year-olds stop talking about it, that's when you should get back into it.
You should be like ripping through it, and then when they start talking about it again, you're at the top, and they're like,
that's when you sell.
That's when like a Stripe comes in, like, yo, 100 mil, like a bill, whatever the hell. I know you're like 100 mil. I don't want that. You're like 2 bill. Yeah. Parker's like, Bill. If there's no B, I don't do it.
Oh man, we're here to build.
Is that a Whoop you got on?
Yeah, the Whoop.
I want to get one because I'm rocking the Aura ring, but like I can't use this to work out.
Yeah, so it's like it's really good for tracking. Like, I mean, obviously like, there's great metrics on it. You get like sleep, stress, workout, but like there's no button to activate when you want to work out. You can't like end the workouts. Like that's the only you have to have your phone on you.
Yeah.
Like if you run,
right? Like if you go for a run, you don't want your phone on you. Like,
yeah. So it's like
the reason I ask is like I have been, but I'm becoming more of like a health nut, and I think everything should be a little bit more health conscious. We got the ice bath on the balcony.
Dude, yeah, it's epic.
It's the best.
I mean, like I definitely.
It's all bullshit.
Freaking living on DiGiorno. It's all microwave. It's all microwave.
First in the morning, but like, real question: what's like your routine? You guys get up at like 6 a.m. and all this bullshit, or like?
Dude, that's so it's not that extreme. I mean, you see all this stuff all over the internet where it's like
he does all this
4 a.m.
He gets up at like 5:30.
Well, it's fine.
Showers
Likes
that
it.
Thing.
It's good. You got to. I think everybody has to go through different like experiments with their schedule and push themselves as hard as they can and like readjust and see what works and what doesn't. I mean, we work 10 to 14 hour days every single day. That doesn't require waking up at 4, but it requires putting in 10 hours of work. So if you go, I don't know, if you're nocturnal and you wake up at 2 a.m. and then you work until 2 p.m., that's still 12 hours a day. If you're doing that every day and you make it work for you, that's fine. Yeah. But obviously there are scientific things around like being nocturnal is bad for your health and whatnot. So probably shouldn't do that. I don't know. We wake up.
I mean, we definitely like
in the morning early and just work, but not 4 a.m., 5 a.m., not like that.
Yeah. We've gone through cycles too. Like there's times where we were getting up much earlier, working out in the morning, and then like working throughout the day, and then like stuff was like optimized around the nighttime. You didn't want to like ruin the schedule. Whereas like now, like, you know, we're still getting up like pretty early, and then like working more in the morning, so we have more meetings stacked then, and then working out at night. Just like, I mean, it's kind of like you kind of shift. Like I did the whole like 4:30. I was like 4:30, go run for like 3 miles, go like to work, and then work out in the afternoon. It's like, okay, it's just
burnout.
Yeah, I mean, at the end of the day, like your job isn't to like, I mean, your job, you're only being healthy so you can be better in your job, right? Yeah. And like, obviously you enjoy it. It's like stress relief, good for you, all that kind of jazz. But like at the end of the day, it's like, how can you just be optimal for what's really important here?
Yeah, I think most people, they try to revolve around like the concept is you wake up and you just do the hardest shit first, and then the easier and more enjoyable shit throughout the day. Do you guys kind of do that as well?
I mean, it's like it depends, because like like I just like I don't know even know because like working out is like fun. It's kind of like a stress reliever for us at the end of the day.
How do you get the ring light?
It's like working out. So it's definitely hard, but like I wouldn't say it's the hardest thing we do every day. So it's like now it's like we just get up and get after it because like we just have more shit in the morning to do now. Like at night we're still pushing ourselves hard in the gym because like we've always enjoyed it. It's like the one way that like I don't know socially we just BS and hang out and have a good time while doing it. We're still going hard, but
it's kind of a way to unwind at the end.
Dude, I just can't. I can't stay consistent when it's an afternoon workout because I'll just end up working till like fucking 9, 10, and I'm like fuck. I don't have any. Like if you have a long day, you can't get to it. That's why I just have to like start my day with a workout.
Yeah. And I think that's why we did do the morning for a while and it was pretty good, but like now it's just kind of like I don't know, it's just the schedules have worked out, and like plus we're traveling all the time too right now like in the next couple months, so it's like honestly it's just wherever you can get it in. So like we say we work out at night, like usually it's like 7 o'clock, but like you know we'll have meetings that run until whenever you go later.
Real question for both of you, 'cause I know you guys pretty well, like whatever. We live together. Oh man,
I punched you in the face.
Oh yeah, we'll go through that. But like legit, have you guys gone to a fight yet? Like
Us? No.
Like a real fight?
No,
not even like a half fight or a mini
Really?
fight. It's just I don't know how it hasn't happened, but it's been.
You guys like probably will, but like it's normal.
We both have big personalities. It's like it's not that neither of us are confrontational. We're both pretty confrontational and like pretty intense. But I think at the end of the day, like we just have a great understanding and relationship with each other. Where like we just over communicate.
That's probably why, right? Like neither of us are like timid. It's like if something's like pissing you off, you're gonna be like, "Hey, yo, like this and this," and the other person's gonna be like, "Well, nah, fuck you, this and this," and then it's like, "Oh, okay."
It's like, so sometimes
that's it.
Sometimes it's like fuck me. Sometimes it's like
just guys. Like I feel like a company run by 2 females would be totally different than a company run by like. And we just met like
that female yesterday.
I mean, she was a beast, but her business partner was a man. Imagine if it was a woman. I can't imagine how much more conflict and how many more crying nights she would have. She has 2 a week.
She cries like twice a week. She said. Kind of crazy.
Well, dude, running a company's hard. Like, I'm not much of a crier, but like if I was, I'd be crying a lot.
Yeah,
but it's
just like
you're down bad, and it's like you can feel it. Like some days it's like, Parker's pissed the fuck off today, or like for like a month it'll be like, Arman's pissed the fuck off. Like it just comes and goes, and like the highs are really really high, but those are much rare, and the lows are really really low, and those are more frequent when you're.
You guys have come like. 2 peas in a pod. I watched.
Yeah. 2 peas in a pod.
Yeah. We're just 2 peas on the pod.
Oh my god.
Yeah.
Fucking Eminem over here.
Just shredded Eminem.
8 Mile and we're on 8th Street, but it's like whatever. We call our moms a lot though.
Jake does that shit.
Dude, no, I mean at the end of the day, it's like
Jake calls his mom.
I
don't even talk to my mom to like complain or like offline. I just call her like, "Hey, what's up?" And like she just talks about like I walked the dog and did this, and it's like there's calmness in this world. It's not all like chaos and this person and that person.
We also realize it's like this is like. Sorry if the investors are watching, but it's all bullshit too.
To what degree?
It's all bullshit, but it's bullshit. Like everything we do, like we could be like fucking homeless in like the middle of like Malaysia or something. Like all this is like fake.
It doesn't matter. Like
it doesn't really matter.
You can do whatever you
Fugazi.
It's all Fugazi. Like you only need like $50K a year to like live happy and like be a normal person. You know what I mean? Everything we do is like literally like 1% of 1% of 1%.
For sure.
And like. The problems that we do face, like, they're big problems, like they're important problems, but like in the grand scheme of life, like,
well, I mean, that was like advice, honestly, that we got pretty early on. Is like we were meeting with some guys that had been successful and that were like potentially going to invest, and like our buddy was like, "Don't bullshit them. Like, don't give them this whole like, oh, I'm out here to change the world and like build this." It's like, you want to do that, like you want to build cool stuff. You really truly do believe in what you're building, but at the end of the day, like it's still kind of an ego thing. Like
money motivated.
You want to make money. You want to like. you want to just drive a successful company. Like the success factor might even be bigger than like the money factor, where it's like you want to just like drive something that wins. And like if you're not winning, then like what's the point of doing it? And then people are motivated to do that, and like are the ones that are actually gonna
you said like if investors are watching, like investors' whole job is to invest to make money. We're all here. Like the top of the list, like what are you doing?
And
make
they play
money.
the whole game where it's like, oh, we do this to like find big vision. It's like, dude, you're here literally to make billions.
Well, I mean, at the end of the day, the big like the Airbnbs, the Ubers, like the big disruptors are like the ones that are gonna like, you have a vision, and it's like a vision's gonna do really well in the market.
It all goes hand in hand. Yeah, it's all hand in hand.
Yeah, that's kind of people don't talk about that. I think they don't talk about the fluffy crap. At the end of the day, dude, it's like I'm here to make money. Like period. Like period. Like
I mean, motivations to make money can vary, but like at the end of the day, it all boils down to one thing.
And like money, success and money, it's like hand in hand. Like if you start a company for $1 billion, even raising $2 million, like that's a success in itself. Like there's money attached to it. Like what we do, it's like there's money attached to it. Like you feel good on the success, but also it's like there's still a number there. Whether it's fake or not in the Chase account, it's still like
put it on chain.
Got anything else? I'm sure this is a good conversation.
So you guys are what, about like a year old?
Yeah, a little over.
So my question to you is, if you were to go back to when you like the inception of the company, what's something you would do different?
Ooh, we talk about this. I think the way we raised might have. I'd alter it. Yeah, I think I'd alter it because it's so hard.
We're just free to go on that. We're gonna skate by that one. Go on.
I always ask like serious questions, and he finds
he's over there fucking whispering in your ear. Yeah. I think there's nothing really. Okay, this is it. I'm about to be all philosophical or whatever. It's the growing pains of being a first-time founder that you just have to go through, where you then look back and are like, oh, I could have changed this and this. But looking back, it's like if you didn't really make those mistakes or take that bad advice, you wouldn't really know any different. So, I mean, there was some investment advice that we took that was like all over the place because we were just hearing so much. Some people were like, raise a little bit at a low valuation. Some people were like, no, raise a lot. A high valuation, do this, do that. You shouldn't hire people. You should hire people. You should build before you raise. You should raise before you build. Like completely conflicting shit flying all over the place. I think the ultimate answer is like, just play with the cards that you're dealt and do what you can and just follow your gut. Like that's all you can do.
Yeah. And at the end of the day, I think that's like the differentiator too. With us too, it's like we kind of knew at the end of the day the only people that we're going to trust to make the best business decision for Peaze was us. And so like, we took a lot of advice and then probably like didn't follow up on it because we just like, man, it's kind of bullshit. Yeah. So I mean, at the end of the day, to be successful in any capacity, you just need to trust that you're the one that's making the best decision every day, and going off that and
just go with your gut.
Yeah, so it's kind of like the thing that like we knew then and like is now we're more solidified and like no, it's like okay, like you really have the trust in like a lot of capacity where you're maybe not even looking for like some advice here and there unless you really like,
no, because every other day that you do it, you get more confident. And you're like, yo, that thing I'm actually thinking that like I did and like someone told me that like to do and I did it, like it worked. So like actually I know what the hell I'm doing. You know what I mean? Yep. And you still don't know all the answers. Like you're not perfect, but like you're like, all right, like every day I'm doing this thing, it's working. So like let's keep.
It's a lot of fun and you test. Like at the end of the day, you're always testing your limits. It's like why like. I think there's a lot of like SBF, like the Sam Bankman-Fried sympathizers, because it's like at the end of the day, the dude was like he was taking big bets and like he was trying things that like may or may not work, and like there's a huge upside, obviously a massive downside. Yeah, and I definitely don't agree with the way he was doing things. I think his like thought process was probably a little off. But like at the end of the day, like how else are you guys supposed to get like from like point A to point B?
Yeah, and if those bets hit, like
everyone would be like, "Yo, he's a genius."
I mean, it just wasn't his money to gamble. I think that's the whole like ethical thing, which was fucked up. But
he was pretty much the Warren Buffett of crypto.
Like, well, like the Zuckerberg of crypto, whatever you want. He was so young.
All right,
it's been a pleasure, guys.
Oh, it's been a good one.
Yes.
Yeah.
Where do we? How do we plug you guys? Like, what do you want people to like? Do you want people to even use it? Like, not use it? What
Peaze.com. Just go to Peaze.com. Peaze. Twitter, same thing.
What are your personal Twitters if you want people hitting you guys up too?
Yeah, it's just Parker Cardwell and Arman Vaziri.
Yeah. We can drop them in the description.
Check in the description below.
Yeah. So I mean,
but
if you want to learn more, down to coach people. Spread the word, do the thing. You know how it is.
You can read our. I mean, if you're interested in like understanding what crypto's about too. Like we have like a blog that's like very low level. Like anybody can comprehend it. I send it to my mom to try and get her to understand every week. And it's just like to see what the ethos of Web3 and decentralization is about. We think it's pretty powerful. Like obviously at the end of the day, like that's why we're here. We believe in what we're building. And so I think that it's just about getting more eyes on it and actually have.
I mean, even at a non-crypto level, like we got buddies who are quitting their jobs and like starting companies, and that has nothing to do with crypto. But there's a lot of advice and help that like we'd love to give, just to like push an army of fuck working and just building stuff and changing the world. Because anybody can work at a company, but
100%.
If you really want to do something, do it yourself.
Definitely. Do the gentleman's challenge, Kyle. That's all you.
Gentleman's challenge, or it's
gentleman's
agreement?
Fucking agreement. Yeah.
So the gentleman's and that, who does this? Morning Brew?
My First Million.
My First Million.
It's a podcast. I don't know if you guys listen to that one. My First Million.
So essentially, because all this free value has been provided, all that we ask in return is for you to like, comment, and subscribe. You know what I want you to comment something very specific, and if you do, we might pick one of you randomly and give you something special. But I want you to comment if you currently own any crypto. That's all I want you to do. Just comment if you're a crypto advocate, if you own crypto. I'm very curious to hear from our audience because I'm sure like some of them do, some of them don't. I used to. I currently don't. I might have like 20 cents because you can't like withdraw 20 cents.
Yeah, it kind of sits there.
But yeah, I'd be curious. Answer that question.
Yeah, throw in the comments. We need some comments, likes, shares. Follow us on
subscribe. Is that a
thing? You gotta subscribe. YouTube subscribe. Subscribe.
Smash that.
We're almost at 1,000. Probably by now. We're probably by this episode. We're past 1,000 subs on this one.
Congratulations on 1,000.
By this is like 4 hours.
Are we celebrating? Is that what we're doing tonight?
Yeah.
1K.
We have like 50K on TikTok. Like over 1,000 on Instagram by now. So like we're getting there.
Cool.
We're figuring it out. I appreciate you boys. Nothing but luck.
Always appreciate it.
Yeah. Thank you.
Thank you, brother. You guys got it.
We'll be back.
All right. We'll be back. Thank you, boys. See you on the next one.